Good morning, traders. I am Stephen Davis, Senior Market Strategist, RJO Futures, here to talk about commodities, the grain markets in particular. Friday, March 18th, the corn market. First chart of the day here. Corn gapped higher on Monday. But my work states 3 days that corn, when these gaps aren't filled, it becomes a bullish scenario. So in the short term, corn and soybeans are trending higher. Now, corn, I have to tell you, is very good at filling these gaps. So sometime it will go down and fill the gap. That's what markets do, and perhaps it can continue its rally higher. The rallies here, I think they're going to be muted. They're going to be short-term in duration. Soon we're going to be into full-blown spring planting, and weather's not always ideal. There'll be some twists here and weather scenarios, but I think the rallies are going to be muted and shorter in duration than in previous years. Soybean market, we're tale of two woes here. Soybean oil trending higher. Soybean oil up 10% since early March, led by Malaysian palm oil, which is up 8% since early March. So kind of an interesting twist here. Weeks earlier, I'd read something where the key to this whole grain market is the biodiesel demand from Malaysia and Malaysia palm oil. So that part of the world, it's really, really strong. Starting to be important in our grain markets here in Chicago, Illinois. Here's something. India imports more vegetable oil, almost twice as much as China. So here's a nation that imports an agricultural product almost twice as much as China. That's impressive. So traders, analysts are getting a little nervous about monsoons in India here. So this vegetable oil out of India, very strong. If they can't grow it in their great country, they're going to buy it and import it from somewhere else. So real good story going on here in the palm oil, soybean oil, canola in Canada, big canola producer. These markets are trending higher. Pay attention. Now, longer term grain analysts will tell you November soybeans at $9 is going to work in the fall. November soybean prices this morning are $9.13. So again, these can be good prices this fall. Nonetheless, in the short term, we're trending higher, probably going to continue to trend higher in corn and beans going into this March 31st planning intentions report. Other than that, crude oil's higher, the stock market's higher. Commodities seem to be turning here. So can the grains continue to trade in this fashion and trade bullishly? In the short term, yes. Longer term, it's questionable. The ending stocks in corn and soybeans are very burdensome. And as we get into this spring, a wet spring is going to be bullish for corn because farmers can't plant corn. And it's going to be bearish for soybeans. It'll be more soy acres. Right here, right now, we don't need more soy acres in North America. So we'll keep talking about that. Everybody have an excellent weekend. Thank you.
Thanks, Dave.
Thanks, Babs. Futures and options on futures may involve substantial risk and may not be suitable for all investors.